One small town in North Texas just ranked as one of the hottest zip codes in America, and it's not what you would think. A new national study shows mortgage payments are cheaper than rent in many U.S. counties, and DFW could be on the verge of a master plan community boom unlike anything we've seen before. With tens of billions of dollars in investment and hundreds of thousands of new homes in the pipeline. Welcome to Jesse's weekly DFW real estate update. I'm Jesse Showalter. Let's get into it. Today's update is a little different, so we're just going to do one local story and one national headline before we jump into our special about the North Texas Master Plan community boom. Let's get into the local news. Our first story this week comes from Collin County, where zip code 75166, Lavon, was just ranked one of the hottest zip codes in the entire United States. This ranking wasn't random. Analysts factored in rapid population growth, highly competitive pricing compared to nearby Wiley, Rockwall, and Plano, a strong new construction pipeline, and heavy online search traffic from relocating buyers looking at homes here. Just a few years ago, Lavon was on the outer fringe of the Metroplex. Today, it's emerging as one of North Texas's most dynamic growth nodes, affordable with momentum, and increasingly on the map for buyers who want space, value, and community lifestyle. Turning now to the national picture. New analysis from the National Association of Realtors shows something we haven't seen in years. In many parts of the country, owning a home is now cheaper than renting, even with mortgage rates hovering around the mid 6% range. If you look at this map, the blue areas are places where the monthly mortgage payment is actually less than the market rent. And when we zoom into Dallas-Fort Worth area, the gap becomes very real. According to the data, the average monthly mortgage payment in DFW is about $1,994, while the fair market rent for 3-bedroom homes sits closer to $2,400. That's a difference of roughly almost $400 per month in favor of owning. Now, this reversal is especially common in suburban and exurban markets with strong new construction activity, places exactly like North Texas. From 2021 through 2023, renting was cheaper than buying in nearly 90% of the U.S. counties. Today, that's flipped, with owning now cheaper than renting in about 22% of counties nationwide. For buyers in mid-price markets like DFW, this creates a real opportunity, especially for people who assumed buying was automatically out of reach. And it also explains why builders are continuing to add inventory in these areas. When the math starts to favor ownership, again, demand tends to follow. This is one of those national trends that actually matters locally, and it ties directly into the master plan community boom we're seeing unfold across North Texas. Now, let's take a look at mortgage rates, because this is where a lot of questions are coming from right now. As of today, Friday, December 12th, when this video was recorded, Mortgage News Daily shows the average 30-year fixed mortgage rate at 6.32%. That's up slightly from last week's 6.24%. So yes, we saw another short bump. Other loan types moved slightly higher as well, including FHA and VA loans hovering just under 6%. Here's the important part though. This move higher doesn't change the bigger picture. If you zoom out and look at the long-term trend, mortgage rates are still moving in a choppy but gradually downward direction. This is exactly how rates behave when the market is trying to reset. A few steps down, a few steps back up, then another attempt lower. Rates don't fall smoothly, and they almost never move in a straight line. To break down what this means for real buyers, real payments, and real decision-making, especially in a market with more new construction and incentives, I want to toss it over to my good friend and lender partner for his monthly update, Mortgage Mike, Michael DeBacker, for a deeper look.
This is Michael DeBacker with the Mortgage Mike Group, and just want to give you a quick update from this past Wednesday and what the Fed decision actually means. So the Fed cut the rate by 0.25%, and this is now the third cut this year, which is a pretty clear signal. They're trying to keep the economy moving as things do cool off a bit. Now, why did they do it? So jobs, they're slowing, growth is slowing. While inflation isn't perfect yet, the Fed is more worried about overdoing it and slowing things too much. What's interesting, honestly, with this vote, it wasn't unanimous. Some Fed members wanted to hold steady because inflation is still sticky, and one actually even wanted a bigger cut. That tells you there's still a lot of uncertainty behind the scenes. So overall, the big takeaway here, the Fed basically said, we're going to take this one meeting at a time, which has been their approach. They're basically saying no promises on future cuts, but they're going to continue watching the data closely. And again, that's the same stance they've continuously take on this. And for mortgages, because I know that's everybody's favorite, and really what I'm here to talk about, this does not mean mortgage rates drop overnight. Mortgage rates move ahead of the Fed meeting and after the Fed meeting, more on what they say and what the future outlook holds, less about the actual Fed dropping the rate. So bottom line, is this a positive step, but not a magic switch or anything that's going to dramatically change what we're doing overnight. If you are thinking about buying or refinancing, it's all about timing, strategy, and options. It's not just chasing headlines. So if you guys have more questions about what the Fed did and how it does impact you, please feel free to reach out.
Thank you, Mortgage Mike. Great insights as always. Now, let's move on to our special New Construction Community of the Week report. With today's New Construction Community of the Week, we're doing something a little different. Instead of a quick market highlight, we're going deep on what may be the most consequential long-term shift in North Texas housing, the rise of master plan communities on a scale we have never seen before. Over the last decade, North Texas has added hundreds of thousands of new residents. That growth didn't just push prices higher, it changed how and where we build. Instead of small subdivisions here and there, developers are now building entire ecosystems with schools, retail, parks, trails, and in many cases, tens of thousands of planned homes across multiple fronts. If you step back and add it all up, there are now more than 20 major master plan community projects, either approved or already underway across the DFW area. Combined, these initiatives represent roughly 100,000 new homes and well over $90 billion in residential-focused investment. Not a minor uptick, but the equivalent of building several mid-sized cities from scratch. So what's driving this? To understand it fully, you have to look at population growth, job creation, and a longer-term housing affordability challenge that has reshaped our market. North Texas continues to grow at an extraordinary pace. Since 2020, hundreds of thousands of people have made this region their home, not just from other Texas cities, but from places like California, the Northeast, the Midwest, and even from overseas. When a metro is drawing new residents at this scale, it doesn't just alter demand, it reshapes where homes are needed and what type of housing gets built. Jobs are a huge piece of the puzzle too. This isn't just population growth, it's opportunity growth. We're seeing expansions in tech, logistics, advanced manufacturing, and corporate services, and many of these are long-term, high-paying roles that anchor families and fuel sustained demand. That confidence gives builders the runway to plan communities that unfold over 2, 3, or even 4 decades. At the same time, North Texas hasn't returned to the affordability that once defined it. Multiple experts have pointed out that rising home prices statewide are outpacing income growth, and the result is a housing affordability gap that hasn't eased. Texas Comptroller reports show that housing costs have climbed much faster than wages, leaving many households more cost-burdened than they've been in years, and straining both ownership and rental markets. That means while we're still adding supply, the type and location of new housing matters a lot, and explains why builders are thinking at the scale of entire communities instead of isolated subdivisions. There's another piece of the equation that often gets overlooked: the role of build-to-rent homes. DFW has become one of the nation's most active markets for single-family rental construction, with thousands of new build-to-rent units either under construction or already completed. These are homes built specifically for long-term renters, often with community amenities, professional management, and the feel of neighborhood living without the upfront costs of homeownership. They increase housing options for people who are priced out of buying or who simply want the flexibility of renting in a neighborhood setting. So when you look at the broader picture, population growth, jobs, affordability pressures, and rental housing trends, it makes sense that developers aren't just adding houses one at a time. They're planning communities that integrate different housing types for different segments of the market. Let's walk through what that looks like geographically in 4 belts of growth that are reshaping North Texas. In the north and northwest, the scale of these projects is breathtaking. Landmark in Denton covers 3,200 acres with nearly 9,000 planned homes and about $10 billion in total development. Think of it as a new city, complete with schools, parks, commercial space, and community infrastructure. Just down the corridor, Cole Ranch sprawls across more than 3,100 acres with over 4,300 planned homes. Another example of emerging urban scale planning. Craver Ranch and First Ranch add thousands more homes and amenities in the northern belt. This isn't a collection of small subdivisions, it's a new urban spine shaping the future of Denton County. And further north, near Lake Texoma, communities like Preston Harbor and Heritage Ranch are blending resort-style living with full-time residential growth, a sign that even traditional second home or weekend areas are becoming year-round communities. East of Dallas, the master plan landscape looks different, but it's no less significant. Terra Nova in Terrell, which we spoke about last week, spans roughly 1,500 acres with nearly 6,000 homes planned across multiple phases and price points anchored in the mid-300s, a nod to the reality that more attainable homes are in high demand. Nearby, North Spur adds on an additional 1,500 homes on about 600 acres, reinforcing Terrell's transformation from a distant commuter town into a serious growth node. In Salina, the parks at Wilson Creek brings roughly 6,000 homes to the table, anchored by a massive regional park that will become a community centerpiece. Closer in, Lavon Farms in Plano stands out as one of the last major greenfield opportunities inside a mature city, a rare chance for new construction within city limits. And over in Mesquite, Solterra stretches across roughly 1,400 acres with thousands of homes and resort-style amenities, a great example of how large-scale community planning is happening even where growth once felt like a distant future. South of both Dallas and Fort Worth, growth is moving from traditional commuter territory into fully planned communities. Tallgrass in Burleson is planned for roughly 4,000 homes with parks, schools, trails, and commercial frontage, more than a neighborhood, a true suburban hub. Crowley's Caris adds 2,000 homes with walkable, amenity-rich design just south of Fort Worth. Waxahachie is seeing multiple large plans, including Myrtle Creek and the proposed Emery Lakes, which together could add more than 10,000 homes and redefine what that city looks like. In Midlothian and Ellis County, communities like Heirloom and Lake Song are on another level. Heirloom anticipates roughly 11,500 homes across more than 3,000 acres. Effectively, it's a new city, while Lake Song brings about 7,000 homes plus a private 100-acre lake and extensive open space. These communities are delivering amenities and relative affordability that, while not pre-pandemic cheap, provide more accessible options than the far northern suburbs. especially for families and buyers seeking space and community. Some of the early indicators of this trend were projects like Fields in Frisco, more than 2,500 acres with 10,000 plus planned homes and over $12 billion in investment tied to jobs, entertainment, and education anchors. Walsh Ranch, west of Fort Worth, with more than 7,000 acres in master planning, also showed that large-scale community building was possible and desirable here. Those early projects weren't one-off anomalies. They were early signs of what North Texas was gearing up to do on a much broader scale. And now that same mindset is showing up across the region. So what does this mean for you? For buyers, the big news is choice. You now have far more structured options than ever before, from amenity-rich planned communities to more accessible pricing in southern and eastern corridors. Buying earlier in a community's build-out often gives you the best mix of price and long-term appreciation as infrastructure and amenities come online. For sellers, proximity to these master plan communities can be a real value driver. Homes near future schools, retail, and transportation corridors tend to attract more interest, especially from buyers weighing new versus resale product. For investors, the opportunities are strategic, not random. Growth tends to follow job corridors, major highways, and evolving community centers, making certain areas more resilient over time. The big picture is this master plan boom isn't adding isolated subdivisions. It's effectively building new cities from the ground up, stitched together with jobs, schools, parks, transit, and infrastructure that will define North Texas over the next 20 to 30 years. And that's it for Jesse's weekly DFW real estate update for the week of December 15th. If you found this helpful, don't forget to like, subscribe, and share. And I'll see you next Monday.